Is investing in stock market risky? Before we answer this question, we will consider bank deposit as the alternate safest most investment option, where we can draw virtually risk-free 6.5%. The chances of the bank getting fail are very little, and even in the rare event, we have a sovereign guarantee from the government. But there is a big problem when we are keeping our money in the bank. Not only the bank offers a very low interest rate, but the interest rates also are not fixed. In the case of a time deposit, which is widely known as a fixed deposit, for a period of 10 years we can draw a certain percentage of interest. But unfortunately, after the end of the period, a new interest rate kicks in and now we have to put our money for even lower interest rates. For example, in the year 1993, the interest rates were 13%. Some banks were even offering 15% interest rate schemes. But as you can see, these days hardly any bank offers anything more than 7%. Central bank adjusts the interest depending on various factors. One of the important most parameters is inflation. As with time, inflation is increasing and the Reserve Bank of India is doing a great job to keep it under 6%. The interest rate is also decreasing, so we can expect it to be way lower than today, in the future. In countries like the USA, interest rates are as low as 1%. In no time it will be our case. Now if we invest in business, with time business income grows. Let's assume one business available for just rupees 100 is earning 6 rupees in a year. If you put the same 100 rupees in the bank it will earn you the same 6 rupees, but with time the business income will increase. So we can expect in the next 10 years, business income will become double, which means 12 rupees. As we know, the valuation of the business is directly dependent on the earning, so with income, the valuations should also get doubled. So if you invest in that 100 rupees business, and after 10 years you will be the owner of a business worth 200 rupees which is earning 12 rupees. Here we didn't count the compounding effect from the 6 rupees earnings the business gave you. But in the case of bank, probably the interest rate will decrease and you have the same 100 rupees, now it's earning maybe 5 rupees. You see the difference, just in a matter of 10 years. If we increase the number of years, it will only make the bank looks even worse. But still, the question stands, aren't investing in equity risky? As per the legendary investor Mr. Warren Buffett, great businesses that are managed by great corporate teams are even safer than the bank. We have all seen what bad management can do in the case of Yes Bank. Great management can manage risk even better than banks. A company not only will beat the return of a bank, but it will also beat the return of the market. That's why it's important to invest in great management. Remember, when you are investing in business, you are investing in a team, a CEO. You believe that person will turn this company into a more profitable one. Not just the team, the right industry, and the right time. Maybe these two are even more important than the first one. Some industries are just easier to make money. For example, the aviation sector is a very difficult industry to make money. Customers have zero loyalty towards the brand. When people book a ticket, mostly they look at two things: cheap price and time slot. In an industry where a bunch of companies is in a price war, is very difficult to make a profit. And timing is another thing which investors should consider. At any point of time, at any stage of the economy, some sector is experiencing a bull trend. For example, even in this pandemic when everything was falling, all NBFC companies in the gold lending business were making a killing. So right industry, right timing, and right management, your investment is more secure than bank. Of course, you will make mistake, there will be some small losses, but if you know how to limit your losses, it shouldn't be an issue. Like in every business, there are some expenses, but the profit takes care of it all, the same way your big gains will take care of all the small losses. We will teach you not only how to pick a great company, but we will also teach you how to limit your losses. If you liked our video, please like and subscribe. Also, we have a course on technical analysis, where you can learn directly from professional traders. With their guidance, you can become a professional trader in no time. Thanks for watching our video.